Hey everyone and welcome back. Today we're diving into a viewer request, a YouTube video with a title that definitely caught my eye. All in, China's stimulus tsunami. I mean, how can you not be at least a little curious about that?
Right. It's bold. And honestly, the timing of this whole thing is really interesting.
Yeah, what makes this particular moment so significant?
Well, the video starts off by highlighting this pretty dramatic drop in China's industrial profits that happened back in August.
Okay, so not a great sign for their economy.
Not exactly. And I think that's what makes their response so interesting, what they're calling the stimulus tsunami. Which, from watching the video, seems like kind of an understatement when you look at the numbers they're throwing around. We're talking billions, with a B, being pumped into their banking system, incentives to get their real estate market going again, and of course that rate cut that everyone's been talking about.
It's definitely a dramatic contrast to what we're seeing from, say, the Fed here in the U.S., which has been taking a much more, shall we say, measured approach.
Dipping their toes in the water, maybe, while China's like, cannonball, right to the deep end. So is that basically what the video is saying, that China's about to make this big economic comeback?
They seem pretty convinced that this is the start of a new growth phase, yeah. And a big part of their argument seems to be centered around valuations, particularly in the tech sector.
Yeah, the comparison they make between Alibaba and Amazon really stood out to me. It's like, hey, look how much cheaper this company is. But isn't there always more to the story than just comparing price tags?
Absolutely. I mean, sure, Alibaba might look cheap compared to Amazon right now, but the question is why? And is that discount justified? You have to look at what's driving those valuations.
Okay, so help me understand this a little better. If I'm looking at a company like Alibaba, what are some of the factors that I should be considering beyond just the share price?
Well, for starters, you've got to look at their growth potential. Even with the economic slowdown they've been experiencing, China's consumer market is still massive, and Alibaba is in a prime position to capitalize on that.
So it's not just about buying something because it's on sale, it's about understanding if it's actually a good deal based on its potential.
Exactly. And in Alibaba's case, there are some pretty compelling arguments to be made about its long-term growth trajectory.
And on top of that potential growth, you've got what the video calls this double tailwind, pushing things along, right?
Right. It's not just one factor making Chinese investments potentially attractive. It's this combination of things happening all at once.
Like what? Give me the rundown.
Well, first you've got the Fed's actions here in the U.S., which has been weakening the dollar, which in turn makes Chinese assets more appealing to international investors. And second, you've got the stimulus itself, which is designed to boost domestic demand within China. So you potentially got these two engines driving growth, both internally and externally.
Okay, so like double the potential upside. I mean, the video even throws in a little personal anecdote about how the creator made a killing on an Alibaba options trade because they saw this upswing coming.
It's definitely tempting to hear those stories and think, oh, I can just jump in and make a quick buck. But that's where the video gets real about the importance of, not just throwing money at the problem.
Yeah, because we always say investing is not gambling.
Right. And this is definitely not the time for just blindly throwing darts at a board full of Chinese company names and hoping for the best. They really emphasize that this is about being strategic, doing your homework, and understanding the specific companies that you're putting your money into.
So not exactly a passive investing environment.
Definitely not. They make it clear that knowledge is power, especially in a market like this.
So we're not just chasing those cheap thrills here, but it's not just about the big players like Alibaba either, right? I mean, the video dives into some really interesting sector-specific opportunities that go way beyond just tech. We're talking about things like metals, mining, even shipping. Why are those areas potentially poised for growth?
Well, think about it this way. With increased demand from things like infrastructure projects in China, that's going to drive the need for, say, metals.
Right, you need steel to build those bridges and buildings and all of that.
Exactly. And then more Chinese consumers with more money in their pockets. That means more goods being shipped, both domestically and internationally. So the underlying theme across these sectors is really about anticipating where that growth wave, that stimulus wave, is going to hit.
So you're saying it's about riding that wave, but you want to make sure you're on the right surfboard, so to speak. And speaking of specifics, I know the video throws out some specific companies as examples, right?
Yeah, they do. They mentioned companies like Freeport-McMoRan, which is a big player in the mining industry. and Starbolt Carriers, which is a major shipping company.
Okay, so those are just like two examples, but the point is that there are opportunities across a whole range of sectors, not just in the obvious ones.
Right. And what I found really interesting is how they highlighted companies that would benefit not just from the increased demand in China, but also from that weaker U.S. dollar that we talked about earlier.
Mhm.
So it's like a potential 1-2 punch for investors who are paying attention.
Double the potential upside, double the fun, right? But I have to say, I'm already feeling a little overwhelmed trying to wrap my head around all these different sectors, all these different moving pieces. For those of us who aren't, professional financial analysts, where do we even begin to make sense of it all?
Well, that's where this whole concept of thematic investing can be really helpful. Instead of getting bogged down in analyzing like every single stock out there, you can kind of zoom out and look for those bigger themes that you think are going to drive growth.
Okay, so like what? Give me an example.
So like in this case, it could be something like China's resurgence, right? You're basically betting on the idea that China's economy is going to rebound.
Right, and then how do I actually invest in that idea?
Well, you could look for funds or baskets of stocks that are specifically built around that theme. That way, you're not trying to pick individual winners and losers. You're just riding that broader trend.
Okay, that makes me feel a bit more like I'm holding a map and less like I'm just spinning a globe blindly. But even with a map, there are always going to be those bumps in the road. And the video definitely doesn't shy away from the potential risks here. What are some of the things that it could throw this whole China growth story off track?
Yeah, for sure. It's not all smooth sailing. One of the big things they talk about is this idea of short covering, which sounds way more complicated than it actually is.
Yeah, break it down for me.
Basically, you've got some investors who are betting against the market, right? They thought Chinese stocks were going to go down.
So they were shorting the market.
Exactly. And now that the market's going up instead, they're scrambling to buy those stocks back to cover their losses.
So it's like a temporary sugar rush, like all that buying activity creates this initial spike, but it might not actually reflect where things are headed long term.
Exactly. And that's why it's so important to look beyond those like short-term market movements and really assess whether the stimulus is actually translating into, real sustainable economic growth.
So how do we measure that? What should we be paying attention to?
Keep an eye on those economic data releases coming out of China in the coming weeks and months. Those are going to give us a much clearer picture of whether this is the real deal or just a temporary blip.
So it's not just about riding the wave, it's about making sure the wave isn't about to crash on the shore.
Exactly. And that kind of brings us to another layer of risk that's always kind of lurking in the background. Geopolitics.
Oh, yes, the wild card.
Right. I mean, even if China's stimulus works perfectly, you've got these external factors that could really throw a wrench in the works.
Yeah, I mean, the U.S.-China relationship always feels like it's on a bit of a seesaw, right? Like up one day, down the next.
Absolutely. And that uncertainty can be really tough for investors to stomach.
For sure. And speaking of uncertainty, I know the video also seemed a bit wary of the getting ahead of itself, especially in the short term, right? Is there a risk that all this enthusiasm about China's comeback might be a little premature?
Absolutely. They talked about the risk of overbought conditions, which basically means prices might have shot up too quickly too soon, fueled by that initial wave of, excitement.
So everyone's piling in, but the fundamentals might not actually support that level of growth yet.
Right. And if the U.S. dollar were to rebound, which is always a possibility, that could really cool things down pretty quickly.
So how do you even begin to navigate all of that, those choppy waters? It feels like you need to be some kind of expert market timer to catch the wave at just the right moment.
That's where their emphasis on active investing comes back into play. You really need to be strategic about your entry and exit points, constantly evaluating those risks and opportunities as the situation evolves.
Easier said than done, I think.
Yeah.
Speaking of strategies, I remember the video mentioned something called the rope strategy, which I have to admit sounded a little bit more like something you'd use to climb a mountain than to navigate the stock market.
Right. It's a pretty vivid image.
So what is it? How does it work?
Basically, the idea is to find balance in your portfolio, right? So you're not just going all in on one particular outcome.
So don't put all your eggs in one basket, especially if that basket is, a little bit wobbly.
Exactly. And the way they describe it, you're essentially creating this rope by diversifying between those risk-on assets like those Chinese stocks we've been talking about that have the potential for really high growth.
Right, but also a higher chance of losing value.
Exactly. And then you're balancing those out with what they call risk-off assets, which tend to hold their value better in a downturn, even if they might not offer those same, like, explosive returns.
Okay, so like what kind of assets are we talking about here?
Well, things like gold often fall into that category.
Okay, so you're saying we should buy gold because of China. I'm not sure I'm following.
Now, I know the video was really focused on those specific stock picks, but what about those of us who are maybe a little more risk-averse or just don't have the time to become experts in, like, the intricacies of the Chinese market?
Yeah, because not all of us can quit our day jobs to become day traders. Are there other options?
Right, because for some of us, active investing means, like, actively choosing a target date fund and then going for a nice long walk, you know?
Exactly.
But okay, seriously, if you're not looking to make this your new full-time hobby, what does a more, like, hands-off approach look like in this kind of scenario?
That's where those like broader investment strategies we were talking about earlier can really shine. Thematic investing, like with those China resurgence funds, can be a great way to kind of dip your toes in the water without having to become an expert in like every single company. Okay, so less stock picking, more like big picture thinking.
Exactly.
And what about this whole risk off thing? I feel like that's where gold always seems to make its grand entrance, right? Like gold's always the answer. The video definitely piqued my interest with that one.
Yeah, you're right. Gold often comes up in these conversations, especially when investors are, like, a little bit nervous about, uncertainty in the market.
Which, let's be honest, is kind of the name of the game these days, right?
Pretty much.
Yeah.
Well, it might seem kind of counterintuitive to connect gold to, like, China's booming economy. There's actually a pretty clear logic there.
Okay, because I gotta be honest, when I think China's economy is on fire, like gold bars aren't exactly the first thing that come to mind.
Think about it this way. A lot of the same forces that are, like, driving interest in the Chinese market right now, things like the weaker U.S. dollar, the potential for inflation because of all the stimulus spending, those things also tend to make gold look more attractive.
Ah, so it's like a backdoor play on the same trends. Like you're betting on the same horse, just in a different race.
That's a great way to put it. And what's interesting about gold is that it can act as a hedge, right? So even if those Chinese stocks don't perform as well as everyone's hoping, gold might actually help cushion the blow a little bit.
Okay, that makes a lot of sense. So we've got options, we've got strategies, but, and I think this is important to say, we are not financial advisors.
We are definitely not financial advisors.
This deep dive has been awesome for like really unpacking all the ideas in this video, but it's not like a personalized investment plan or anything.
No, definitely not. It's more like, food for thought.
Exactly. It's a starting point. So if you're hearing all of this and thinking, okay, cool, but like, what does this actually mean for my portfolio, for my money?
Oh.
Talk to a professional.
Yeah, 1,000%. Talk to someone who actually knows your situation, your goals, your risk tolerance, all of that.
Right. They can help you connect the dots.
Exactly.
Consider this like your launching pad for further exploration.
Love that. Keep learning, keep asking questions.
And speaking of further exploration, there's this one last thought from the video that I kind of can't shake. The creators seemed really convinced that the Fed, like, totally dropped the ball with that recent rate cut.
Yeah, it's a pretty bold statement, for sure.
Mm-hmm.
And it makes you wonder, like, what do they know that we don't? What are they seeing that's making them make these kinds of moves?
And how does that impact the bigger picture, even beyond China? It's like they're saying, hey, this wave you're trying to ride, it might be part of a much bigger storm.
Right. Like, buckle up.
And that's the thing about the market, right? It's all interconnected. What happens in one part of the world, it has these ripple effects everywhere else. And that's kind of what we wanted to do with this deep dive, give you the tools to understand those ripples, to understand why China's doing what they're doing, what the potential opportunities and risks are, and how it all fits into that global economic landscape.
Because at the end of the day, knowledge is power. The more you understand about how these things work, the better equipped you'll be to make smart decisions about your own financial future.
So there you have it. A deep dive into the world of Chinese stimulus, global markets, maybe even a little gold for good measure.
Don't forget the gold.
And as always, we want to hear from you. What are your thoughts on China's big move? Are you bullish on their economic prospects, or are you taking a more cautious approach? Head over to our website or find us on social media and let us know. And be sure to subscribe to the show so you don't miss our next deep dive. Until then, happy investing, everyone.